What is going on, gang? Give a few seconds for you guys to kind of file in here. Hey, what's going on, traders? Make sure you're sharing, make sure you're retweeting this. Rick, what's going on? Always with the kind message. Yeah, out and about. Just got back from first bike ride of the year. So yeah, good ride. Went about just under 18 miles, so a little shaking the legs out. It was a little rougher than I expected, but first one of the year. It's trying to get back into it. I love these various backgrounds they're scoping from. Thank you. Yeah, well, 18 is small. Wait to keep following me all summer. See, you'll see what we get up to. I probably won't be doing periscopes at that point if we do like a 50 miler or something like that. The most I've ever done was I did 60 something by accident. We were supposed to do 50 and I think we got lost and did 60 something. But I wanted to give you guys a quick periscope while I'm stretching out here because I'll be honest with you, I'm usually pretty lazy. I don't stretch out, so this kind of gives me a built-in excuse to do so. But it was a pretty cool topic that we had in our live trading room. We had a newer trader in there who was asking a question about drawdowns, and we had a nice little discussion on the two types of drawdowns. And the two types that I described, one was a natural drawdown, the other was a self-made drawdown. You can kind of tell by the description which is which, and you know, and one you need to worry about a lot, one you don't need to worry about so much. But a natural drawdown is the drawdown that naturally occurs with your strategy. Again, any trading strategy, any trading technique isn't 100% perfect. It's gonna have ups and downs. Again, just look through your back testing results and you'll see that. Most strategies are often built towards certain type of market. So if you have a very directional, say trending market, and you have a trend following or a trend continuation strategy, it's going to do very, very good during those moments. Unfortunately, or during those periods, I should say, unfortunately, during times of consolidation, it's not going to do so well. And then vice versa. Say you're an advanced pattern formation trader, someone that trades consolidation. When the market's in consolidation, it's probably going to work out really, really good for your trading strategy. However, when the market is directional, when it's trending, it's not going to work out so much. So those type of drawdowns are natural because the market naturally changes how it moves. Typically, it consolidates about 70% of the time, trends about 30% of the time. So you got to kind of just bite the bullet and trade through. Now, with that being said, whenever you enter a drawdown, guys, you want to make sure you do a self-check. We're really, really big on evaluating yourself, evaluating your performance, just as, you know, a coach would evaluate an athlete. Being your own trading coach, you need to evaluate your performance and make sure that it is a natural drawdown and not a self-made drawdown. A self-made drawdown is going to come mainly from making mistakes, you know, skipping trades either from fear or taking trades that you're not supposed to be in because you're greedy, taking stops off or moving stops back, taking targets early. A lot of the typical mistakes that we see traders make, those are going to be a self-made drawdown. And if you're in one of those, if that's the reason why you've been on kind of a losing streak or you've been having trouble creating new equity highs, you need to nip that and stop it right away. A good friend of mine, Colin, shared with me, I don't know how many of you guys are Saturday Night Live fans, but sent me a video from an old Saturday Night Live skit where the lady was going in and talking to, I guess, a counselor, and she's like, I have this problem, what do I do? And he's just like, stop it, just stop it. And that was his answer to everything. And that really is the answer, guys. If you're making mistakes, if you have a problem with taking targets too early, everyone's looking for the shortcut. What's the special trick to stop those psychological mistakes? 2 words. Stop it. Just stop doing it. You know what you're doing. Am I right? You know what you're doing. Just stop it. It's no different from someone that wants to lose weight. You know, someone's like, oh man, I'm lazy, I'm out of shape, I want to lose weight, and they keep going back and eating the cupcakes. Just stop it. Just stop doing it. There's no secret trick to it. Stop. So a lot of that is with the natural drawdown as well. Now, one more topic I want to cover. This was an email from one of our syndicate members. and he was talking about he's been back testing cipher formations or in the process of doing so. And he was noticing that. He says, hey, Akil, I was back testing cipher formations, and I noticed that dollar Canada had bad performances. What should I do? And you're going to have pairs like that. Again, same, just like we discussed earlier about how some markets are directional, some markets are more, they consolidate, and they change over time. But the answer is simple. If you do your back testing for your strategy, if a particular pair or even a particular time frame in some instances doesn't meet your strategy, guess what? Just don't add it to your portfolio. Kick it to the side. There are plenty of pairs, that we can use. There are plenty. Most brokers will offer 20-something pairs that you can use, so you don't have to trade it. And if you're someone that's been trading for a while, you do have to understand. I got so bad helmet hair right now. Gosh. If you're someone that's been trading for a while, Jason Grayson said euro pound when he just doesn't trade. If you're someone that's trading for a while, also realize that market conditions will change. You may have a pair that you've back tested that works. We can take dollar Canada, for example, that worked really, 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 really good 3-4 years ago when you were back testing it. But in the last year or so, because it's been very directional, maybe it doesn't work with your strategy. And if that's the case, you have to adjust. I make a habit to go back and review my trading plan every quarter, so every 3 months. And if I'm going to make and I haven't done it too much, but every once in a while you make a change. You say, hey, this isn't the most efficient or most effective way to trade this strategy, this pair, or maybe even a little technique, a filter inside of there is hurting my trading performance. I need to make an adjustment. And part of trading, just like the coaching example earlier, it's making adjustments on the fly. You come in with a game plan, you come in with a strategy, but as you evolve as a trader, as you go through years and years of trading, you may have to make adjustments due to the market conditions. I don't want to get too into that, because that's probably sending the wrong message to a lot of you guys. When you guys that are just starting out, you need to find one way and trade that one way strictly with your rules. But as you get more experience, you start to get in the market's OODA loop a little more, and you start to realize what adjustments you can make. Hope I don't hurt people too much for saying that. So that's it, gang. I'm gonna get inside and hydrate a little bit, but wanted to give you these quick short periscopes. Do me a favor, if you're watching this on YouTube, if I post it later, just do me a favor, hit that like button, hit that share button for you guys here on Periscope. Just share this on Periscope, share it on Twitter, share it on social media. I love doing these little things when I have time, especially these random ones in random places. So as long as you guys keep showing the support, it gets me pumped and excited to drop these little knowledge bombs to you. So until next time, guys, plan your trade, trade your plan. Akil out.